Welcome back to AI Assets, the channel where we break down the most important stories in AI and tech investing every single day. Today, we are going deep on DeepSeek, the Chinese AI lab that shocked the world earlier this year, with a model that matched GPT-4 at a fraction of the cost and is now raising 50 billion yuan, equivalent to $7.4 billion, in what would be the largest startup funding round in Chinese history. This is not just a business story. This is the opening move in the most consequential technology rivalry of our lifetime. Let us start with what we know. DeepSeek, the Hangzhou-based AI research lab, backed by the Chinese hedge fund High Flyer Capital, is in advanced negotiations to close a funding round from a consortium of Chinese state-backed and private investors. The round values the company at a level that would put it in direct competition with Anthropic and OpenAI on the global stage. This is not the first time DeepSeek has made headlines. Earlier in 2026, the company released a series of open-weight models that performed at near-frontier levels while requiring dramatically less compute than their American counterparts. The release sent shockwaves through Silicon Valley and caused a single-day wipeout of nearly $600 billion in market cap across US tech stocks, with Nvidia taking the single largest hit. Now, DeepSeek is not just releasing models. It is raising the capital to build infrastructure, attract talent, and scale at a pace that directly challenges the American AI dominance narrative that Wall Street has been pricing in for the past 3 years. Let us talk investor context, because this funding round has direct and immediate implications for your portfolio. The first company to watch is Nvidia. DeepSeek's efficiency breakthroughs are a double-edged sword for the chip giant. On one hand, more efficient models mean less GPU demand per model. On the other hand, if DeepSeek-style efficiency unlocks AI adoption in hundreds of millions of devices and enterprises that previously could not afford frontier AI, the total addressable market for compute expands dramatically. Nvidia is currently priced for a scenario where both things are true simultaneously, and that makes it extremely sensitive to any DeepSeek news that tips the balance. The second sector to watch is US cloud infrastructure. Amazon Web Services, Microsoft Azure, and Google Cloud have all built their AI revenue projections on the assumption that frontier model inference runs on American infrastructure. If DeepSeek captures a significant share of Asian enterprise AI workloads and runs them on Huawei chips inside China, that revenue simply never materializes for American cloud providers. The risk is not immediate, but it is real and it is growing. The third and most direct impact is on OpenAI and Anthropic, as they both prepare for public listings. Every $1 billion DeepSeek raises is a signal to institutional investors that there is a credible, well-funded, state-backed competitor to the two most hyped IPOs on Wall Street. That compresses valuation multiples. Not dramatically, not overnight, but persistently and in one direction. Now here is what the market is missing. And this is the angle you almost never hear on financial television. Everyone frames DeepSeek as a threat to American AI companies. That is the obvious read. But the smarter investor question is this: what does DeepSeek winning actually look like for global AI infrastructure demand? DeepSeek is not just building models. It is proving that world-class AI can be built with fewer resources, less compute, and open-weight architectures that anyone can run. That is not a threat to AI adoption. That is an accelerant. Every company in Southeast Asia, the Middle East, Europe, and Latin America that previously could not afford frontier AI because of the cost of American API calls is now looking at DeepSeek and asking, can we build our own? The answer is increasingly yes. And that means the next wave of AI investment is not about who builds the biggest model. It is about who builds the best tools, the best infrastructure, and the best deployment platforms for a world with multiple competing frontier models. Companies that provide the horizontal layer, the model-agnostic infrastructure, the fine-tuning tools, the enterprise integration platforms are the ones that win, regardless of whether OpenAI or DeepSeek comes out on top. That is the investment theme the market has not priced in yet. Think about what happened in cloud computing. The battle between Amazon, Microsoft, and Google was fierce. But the companies that printed the most consistent returns were not the hyperscalers themselves. They were the middleware players like Snowflake, Datadog, and MongoDB. The same dynamic is about to play out in AI, and DeepSeek is the catalyst that accelerates it. So what happens next? Here are the specific events and catalysts to track. The first is the official close of the DeepSeek funding round. The deal is described as in advanced negotiations as of this week. When it officially closes, expected within the next 4 to 6 weeks, watch for the market reaction in Nvidia and other AI infrastructure names. A strong DeepSeek valuation confirmation will likely trigger a fresh debate about AI valuations in the US, which could create volatility and entry opportunities. The second is the Anthropic IPO. Anthropic is currently targeting a late 2026 listing at a valuation near $1 trillion. The DeepSeek funding round directly pressures that narrative. If institutional roadshow feedback shows investor concern about Chinese competition, Anthropic may be forced to price more conservatively. Watch for any news about Anthropic adjusting its IPO timeline or valuation range in the coming weeks. The third is the next round of US chip export controls. The current restrictions on advanced AI chips to China are already extensive, but they are not airtight. The Commerce Department is expected to publish updated guidance before the end of Q3 2026. Those rules could either tighten the screws further on Chinese AI development or create unexpected loopholes that benefit certain US chip companies with approved export channels. Either outcome is a major market mover. Smart positioning right now means two things. First, treat any Nvidia dip driven by DeepSeek efficiency headlines as a potential buying opportunity because the total compute demand thesis remains intact. Second, start building a watch list of AI middleware and infrastructure companies that benefit from a multi-model world. The names that thrive when there is no single dominant AI provider are the ones you want exposure to as this story develops. The AI race between the United States and China is no longer a future risk to model into your portfolio. It is happening right now. $7.4 billion is not a research experiment. It is a declaration of intent. And the companies and investors who understand what it means and position accordingly will have a significant edge over those who are still treating this as a story about two countries competing for prestige. AI Assets is here to give you that edge every single day. If you are not subscribed yet, hit the subscribe button right now and turn on the notification bell. You will not want to miss what is coming as this story develops over the next few months. And leave a comment below. Do you think DeepSeek can genuinely compete with OpenAI and Anthropic at the frontier level? Or is this all just geopolitical theater? I want to know what you think. That is all for today. See you in the next one.